Indian market, which is quite more a fundamental rather than just on a technical side or on a speculation side. What we see as of now is India, Indonesia, whatever the emerging countries, and whatever fund we see from 2013 till 2020, that was the biggest fund in India received in this time. So after COVID, what FIIs are looking for, they are looking for some sweet spot where the market is little bit below value and they can invest for a longer term. And they found this in India on a very good side. Now let's see where they put their money into. So if I see FIIs in equity, if you see from December 20, from June 20 to December 20, you will see only green places where they just invested money. They didn't withdraw their money outside into that. Or if you see the debt also, not only into equity, you will see a little bit good valuations. Why there is a less or there is a red in debt? The answer is very quite unreasonable, guys. India in terms of their India is on a very lowest side in terms of their interest rate as of now. That's why you all are enjoying a very cheap and very sweet rates of home loans, your car loans and everything. The rate is going to be the same. I'll take it later. How about the rate is going to change? How you can take the best advantage in today's time for your money and all these things. But if we see here, they are more towards equity. They are very less towards the debts. So whenever they are into the equity, means they are coming with some risk. They are coming for a longer term, which can give India a good fundamental. So whenever you put your money into equity, you are taking more risk. And when you take more risk, I think you take more risk when you have more confidence on the market, when you have more confidence on the business. So they have more confidence in Indian story. They have more confidence into India manufacturing story, which we didn't see till now in India. So what hua kya hai? From 2014 to 2020, if you see the Indian market, what sectors give you a very handsome return? I think India to be known as a service hub. I can say trading hub or service hub. That's why you see a big disruption in IT market. We have Infosys, we have TCS, we have Wipro, these type of companies. So India is always like a sweet spot for service hub, for giving services. It can be BPO, it can be KPO or something like that. I think that is the first time post 2019 when Honorable Finance Ministry and the entire PMO is giving focus towards the manufacturing. So in next 2020 to 2025, you will see a big disruption into manufacturing hub also. So India is going to take some of the very good market of China, which is known for their manufacturing hub. When India is going to be the manufacturing hub, I think it will take some 3 or 5 years time, because service hub is for a smaller time. If you want to make your country, if you see India as a manufacturing hub, you need to take lots of hurdles. You need to take lots of pressure for that. Pressure in terms of giving a very good infrastructure support, giving a very good policy support about labor laws and all these things. So these supports any of the foreign companies wants to take in India. If you just read last week newspaper, you found 2 or 3 good news. The one is about the Apple. Apple is come up with their entire store and all these things. Samsung is going to double their manufacturing capacity in India, in Noida. So at present, if I see about the Samsung has somewhere around 23,000 odd employees in India. That is going to be the double. That's the manufacturing hub. That's the, I think, make in India, which makes India a better place for a longer term. That I think this chart somehow show us ki they have more confidence towards equity rather than putting debt where they need some of the safe spot. They want to take risk. They want to invest in Indian business. When they have a long-term attitude, when they have a long-term story, when they feel ki in long term India is going to perform. So what I see from these chart, I think they are very much bullish. Indian domestic market are very much bullish. Why DII invested so much amount? If I am talking about DII, I am talking about domestic investment. Domestic investment, it can be through mutual fund, it can be through direct equity. So Demat account in India, if you see in last 3 months, you will find a largest number of Demat account had opened in last 3 weeks, in last 3 months time in India. Why it had happened? Whenever we are at home, we work from home and something like that, we take our money and put it into bank only, into bank just to safeguard ourselves. So I can say it's like an emergency fund. If something happens to me, that fund I can sustain from this fund for next 3 months or 6 months. If at any point of time. So I think in COVID, everybody has a filler कि what about my job? मेरी job का क्या होगा? Somewhere out time should not come when I don't have any job and all these things. So what people usually did, they just take this money, put it into fixed deposit, put it or just kept it into their bank account. Why? The answer is very simple. Due to some of the security they want, some of the emergency fund they want to create. So what's the means of emergency fund? Emergency fund in terms of health, it can be health emergency, it can be job loss emergency also. So now when we all come out, when we all come on a normal scenario, what first thing I will do, whatever money I kept for this emergency, I will use it in the market, I will use it for investment. That's why you saw a big investment in commercial property, in real estate, in equity market, because people has money, people just saved this money for last 6 months or a year time. Thereafter, now it's the time when everything is normal. Now I am positive. Now I am happy कि okay मेरी job को कुछ नहीं होगा. I am now more safe and secure. Now I should again start investing. So that if you see in last 3 months, you saw a big huge lump fall of all these investment into equity market, and that's why equity market went just high into that. These are the 6 steps. I think these are the main core 5 steps which we should understand and we should implement in today's scenario. First is emergency fund. Always 3 to 6 months of your mandatory expenses should be into your bank account, should be into your fixed deposits, or should be into your liquid fund. It will always give you a mental support. It will always give you a cushion in any of the abnormal scenarios which we saw in last 20 years into that. So I think that's the thing which we all should maintain first. So what's the mean of emergency fund? What's the mean of mandatory expenses? Guys, mandatory expenses, a very simple guidelines. Don't think it's a big thing, something to calculate. Your grocery expenses, your EMIs, whatever is your committed expenses. Committed expenses can be your education for your son or daughter's education amount or something like that. Put this money into some of the bank account, and just don't take debit card or something like that for this bank account. Just put it there only. Don't at any point of time touch this amount for anything whatever had happened. So I think that is the emergency fund everyone should create. COVID, the best lesson which COVID tell us about this, we should always have an emergency fund either for health or either for some job loss or some of the abnormalities which may come in future also you don't know about. Cash flows. Understand the difference between luxury and need. There are two things. If we talk about goal part, what's the mean of goal? What's the mean of financial goal? We usually tell our client that you should always have a goals and you should always have some asset. If I have a goal of retirement, I should have an asset so that I can take this asset, I can use this asset for my retirement. The best example is Provident Fund. The best example is PPF and all these things where I put money only and only for my retirement. So retirement is my goal. But buying a car, buying a luxury car, buying a luxury club membership, I think that is something about not need, that is luxury. Earlier, there are lots of things which is luxury, but we converted this luxury into need. So these all are goals. We have to be we have to define very clearly what is my need and what is my wish, or what is my luxury things into that. Just make two things into that. And I think the best litmus test to take to tell what is it a need for you or is it a luxury for you. I think there is only one parameter. Anything which come with expiry date, in medical language, if I say anything which come with expiry date, any goal which has an expiry date, I think that's a mandatory. So for an example, for my daughter's education, if she has a time period of 6 years, after 6 years, let's say in 2027, I need money to send him to abroad USA, and I need somewhere around 1 crore rupees. So at any point of time, I cannot tell my daughter, I don't have money as of now, so please postpone your education for a year. That is my goal, that is my need, that is my need. I cannot postpone it, I cannot prepone it, I cannot do anything into that. But just coming to on the second fact, after 5 years, if I wish to buy a house of 3 BHK or 4 BHK, that is somewhere around is my, not as a need, it can be as my luxury, which because I can prepone, I can postpone, I can make amount lesser, I can make amount bigger according to my scenarios, according to my cash flows. So that is more or less towards the luxury or a wish side. So always make a proper demarcation between your needs and your wishes. What is your wishes? So your first priority for your goals and for your assets is your need, not your wish. After that, if you have something good amount of risk appetite, good amount of good saving appetite, I think then you can go for wishes and all these things. systematic investment plan, SIPs. At any point of time, whatever will market go, whether from March 2020 till January 2021 and from January 2021 to January 2023, 22, don't stop your SIP at all, because that will give you a very good edge over the market speculations, over the market up and downs. Because you and me, I think we all are same into this market. Nobody in the world predicted market very correctly, be it Warren Buffett, be it Rakesh Jhunjhunwala, or anybody in the world. Nobody can predict the market, what is going to happen tomorrow, what is going to happen after a year or after a month. So I think the best way to invest in this market, keep investing. I think that is the biggest and very good habit to make a very good health. आप सब भूल जाओ, you forget everything from my this presentation, but take only one thing from this. Whatever earning you have on a monthly basis, whatever cash earning or whatever in hand earning, it may be salary, it may be business and all these things, whatever you have, at least 10 to 15% amount should go into SIPs for at least 7 to 10 years. If you make this practice, if you will discipline on this practice, I can bet you guys, whatever will be the market, be it Indian market, whatever will be the scenario in Indian economy, whatever COVID will come into that, you will never lose your money. That's my guarantee. But yes, your time period should be more than 7 to 10 years, and it has to be a discipline approach. If it is not a discipline, okay, market down hai, I should put more, market up hai, I should stop my SIPs. So you will find lots of good news or free advice from your friends, from your families and all these things. And I think you are the best person to tell me ki what's the mean of free advice. Free advice is very, very costly advice at any point of time, be it health or be it wealth. So I think my wealth business and your health business are very, very correlated with each other. Why we go to a doctor whenever we need some personal advice, or whenever we are into some type of a big trauma बोल सकते हो, or big of some health issue हो सकते हैं, then we go to doctor to take advice from that. That advice should not be free. Why? Free advice will always be a biggest costly advice for you. So I think you should keep focus, you should be disciplined on your SIPs. Though it doesn't mean that if you select one fund today, you have to keep investing into the same fund till 7 years or 10 years. You should review your portfolio at every 3 month, 6 month, or a year interval. Ideally, I can say 6 months to 1 year. Just check the fund performance. Just check whether this fund is performing good or not. If it is not performing, switch your SIP from one fund to another fund. There is no problem. But stopping any SIPs, pausing any SIPs is, I think, dangerous for your wealth. Financial plan and portfolio review. If your portfolio is into equity more, so take an example. If you have if you have 100 rupees with you, and out of 100 rupees, if 50% of your amount is invest into equity, it can be direct equity, it can be PMS, it can be mutual fund and all these things, then you should review your portfolio every quarter. Every quarter, you should review your portfolio, whether my portfolio is giving desired return or not. Whenever the returns are abnormal, it can up, it can down. Whenever the returns are abnormal, you have to take a closer look of what is happening over there. So बोलते हैं ना कि BP blood pressure बहुत ज़्यादा high भी नहीं होना चाहिए, बहुत ज़्यादा down भी नहीं होना चाहिए. So the same way, if you are expecting कि okay, my portfolio should give me 10% return, then it should be 10%. It can go up to 12, 15, but if it is going beyond 15%, I think that's also a sign of dangerous कि you are overexposure in one of the sectors. And the same part, if your portfolio is going, if your desired return is 10%, and if your portfolio is giving below 7 or 6, then also it's time to review your portfolio. So always review your portfolio on a quarterly basis, on a 6 monthly basis. Just check it whether whatever scripts, whatever equity I have, whether all are good or not. See, in Indian market, if you see in last 10 years or a 1 or 2 decade, you saw a good companies like Jet Airways and all these things. They were also into the trouble side. So you can't predict, okay, whatever ABC company is on top Nifty, top 5 company में India में आ रही है, it will be same in top 5 in coming 10 years. That is not going to happen, guys. So you have to keep review your portfolio. You have to keep check your portfolio. Whatever equity I have, whatever mutual fund I have, whether they are giving me desired results or not. If they are not giving, I think that's the time to review and switch your portfolio from one to another. Last and foremost, any person who is coming in equity market as an investor, I request all of you guys, don't think about future and option and F&O. I think in equity market or in equity trades, in my entire career of 14 or 15 years, I never saw a single person who make money in F&O, who make money in trading. If you are doing trading, If at every day 9:30 you sit in front of television, just seeing the rates, कुछ buy कर रहे हो, कुछ sell कर रहे हो, I think you are in a very very danger zone, guys. Don't do it. F&O, F&O is a fire. It can ruin your entire wealth. It can take your entire earning of last 20 years, 25 years. F&O is that type of bomb. Don't ever touch it at any point of time. कोई भी आके, if anybody is telling you कि market is very good, you should put your entire money, you should take 2 or 3 good thing into F&O and all these things. I think at any point of time, equity चाहे किसी भी level पे हो, be it on a 28,000, 30,000, 35,000, 40, 45, market will never be a right time for F&O and trading. Don't do any trading into the market. Investment need consistency. Investment need discipline, which you should have. If you don't have, then stay away from equity market. That is the only advice I can give you in terms of equity. What we see as a market outturn in calendar year 21, equity, we see equity as a neutral. We don't see a very very big and sharp correction again into the market, though you can see market can go up. Whatever all these research companies are predicting, a very fantabulous V-shaped recovery into the market, very good GDP numbers, revised GDP numbers of 7.6%. These all numbers show somewhere around yeah, we can see a good rally into equity market, though not the same like we saw in 28,000 to 48,000, something like that in a shorter span of time. But yes, equity can still give you a very good return for a longer term. Your period should be 3 or 4 years time, and large cap and index fund are the best and safest fund to. So whatever investment you have in your equity component, of that 20% should invest into index fund. Index fund can be a Nifty index, index fund can be a Sensex index, but not any sector index. Don't put your money into sector funds or sector index fund. Market is not right for sectorial funds. Market is very good for Sensex index, for Nifty index. So just go to Google, googling out what's the mean of index fund, or just write down best index fund as of now. They will give you some list, ICICI, SBI, SDFC, blah blah blah. Just take one of the, even you can start good SIP into index fund. Index fund which diversified your portfolio, which lowering down your risk. So I think index fund is a very good bet. If you want to invest 100 rupees into equity, put 20 rupees at least into index fund. Large cap is good bet. Approach should be long term. Approach should not be a small term. Avoid small caps call till dust settle down. Small cap is not a good bet as of now. Mid cap is a good bet. You can make your investment diversified. So take an example. If you want to invest into equity mutual fund 100 rupees, what my advice to you? I think that's the best thing which I can start with. So my advice to you is, out of 100 rupees, 20 rupees should be into index fund, 30 rupees should be into large cap fund, and thereafter in remaining 50, 30 rupees should be into mid cap fund, 20 rupees should be into multi cap fund, but not more than 5 to 10% into a small cap if you want to take small cap exposure. But if you are taking small cap exposure, keep in mind a period of 5 years or more to take care of your wealth. So that is only in terms of equity. If I'm talking about fixed deposits and all these things, I think if you have any goals for from here till 2 years. So take an example. I have a very good equity investment. I have a very good investment into equity mutual fund. And after 2 years, I have one goal. It can be my daughter's education. It can be my retirement. So you need money after 2 years. And you have, as of now, you have money into equity. I think that is the best time to switch your money, to redeem your money from equity, put it into some fixed deposit and something, so that after 2 years, once your goal is coming and once your goal is near to you, then you can take this money from FD and use it. Because if you don't take out money today, there may be a chances 100 rupees will become 90 after 2 years, because market is on a 48,000 or 49,000 level. So I cannot say market is cheap, but yes, market is not expensive also. But my goal cycle is just next to 2 years. So if you have any goal for a year or 2 years, I think that's the best time to redeem that much amount of money from equity, put it into debt. If you want to put your money safely into debt, I think that is a good time to take a very good fixed deposit for 2 years, though the rates are very, very less. But in coming future, you will see a little bit sharp up of debt rates, of fixed deposits rates and everything. Even you can find a very good PPF. Sukanya Samriddhi is a very good account. You can take lots of detail either from my office or some Google and something like that. Sukanya Samriddhi and all these things. These are the good debt investment. Debt investment should be into government securities. Debt investment should be into government schemes. Debt investment should be into banks only. This is not a very good time to make a bigger exposure into corporate NCDs, into corporate fixed deposits and all these things. Out of 100 rupees, maybe 25 or 30 rupees you can invest into corporate fixed deposit and something like that. But out of 100, total 100 rupees into fixed deposit of corporate, I think I will not advise you to take care. Make a very good handsome portfolio in debt also, which you can able to make it. Some amount into government schemes. It can be PPF, it can be provident fund, it can be senior saving schemes, it can be Sukanya Samriddhi. Some amount into good bank fixed deposits, and thereafter a little bit amount into that for NCD and all these things. But yes, you will find lots of good debt investments also into the market. If you want any of the lists, I can mail you. There is no problem. Gold, entire your 100 rupees, 10 or 20% should always be into a gold. And what is the best scheme to invest into gold? Sorry to all these ladies, but yes, I think new SGB bonds of RBI is the best scheme for gold. In every quarter, RBI launch SGB scheme, Sovereign Gold Bond Fund. The best and biggest benefit of SGB is that, so take an example. I am taking 100 gram gold today. I am investing into SGB equivalent to 100 gram rupees of amount. What is going to happen afterwards? So every year in fixed deposits, what you get? You get interest. In here, how you get interest? You will get interest in terms of grams. So out of 100 grams, I will earn 2.5 gram more. So after a year, my 100 gram will become 102.5 gram. So my appreciation in quantity as well as appreciation in pricing, if there is any from the market, I will get only and only in SGB. So just comparing it with fixed gold deposit or gold ETF, physical gold is not a good option and not a good viable option. One is the making charges. Second, the concern is about the purity. And third, at the time of selling, you will get a little bit lesser rate from that. In terms of gold ETF, now after SGB came into the picture in Indian market, gold ETF is no more a very good sweet spot to take care. If you want to invest into gold, I think the best way where you can invest your money is Civilian Gold Fund by RBI, SGB bonds. Every quarter, they will come up with that. You need to pay a price. You need, just like a fixed deposits, you need to invest. They will give you a certain quantity or units in your demat account, in which you will get quantity appreciation as well as the price appreciation, if any, into the market. So I think that is a very good sign to diversify your portfolio. That is a very good thing to hedge your portfolio also. So you will see, I think we saw in somewhere around July 20, when debt market is also down, when equity market is also down, but gold is on a higher side. So you will always find equity and gold on an intraversal reversal relationship. So whenever one comes up, second comes down. Whenever ones go up, second comes down into that. So I think gold is a good investment option. Real estate, though you saw a very good amount of, specifically in Maharashtra, when there is a concession of rates and everything, you saw a big movement about the property buying and selling and all these things. Though in today's time, I will not say real estate is a bad investment. If you are going to take property for your own self, I think that is a very good time. You should take it, because you will find the home loan interest very low. You will not find a very high or absorbent rate of somewhere around 10 or 11% into that. So I think that is a very good time to buy a house property for yourself. But if you want to buy it for the investment perspective, and if you are in the range of 45 to 55 age of bracket, then I think you should invest in some of the good commercial property. So my focus towards commercial property is more because of after 5 or 10 years, because you are going to buy it as an investment. So you always find a good rental yield compared to appreciation, which you can see into residential property. So commercial property will always give you very good rental yield. So if you buy a property of 1 crore rupees, if it is a residential property, it will hardly give you some of the good rent amount, maximum by 2 or 3%, not more than that. But if you buy a commercial property, I think still in commercial property, you will get a yield of somewhere around 5 to 6%. And if you are lucky for taking something good into that for some stress property and all these things, your yield can go up to 7.5%, which is a decent yield. So for investment, I think I will suggest go with some of the commercial property and link your rental value, whatever rent is there, with your EMIs. So we will take a very good example into that. Agar if I am going to buy a property of 3 crore rupees in Mumbai, and I see okay, from this 3 crores of property, I will get a decent rent of 1,50,000. So I should take 1 crore 50 lakhs as a loan. So my EMI will be 1,50,000, which I can compensate from rent, and remaining 1.5 crores I can invest into that. So after 7 years or 10 years, at the end of EMI provisions, the property belongs to me, and I am still getting a very good rental yield in my retirement time. So I think real estate is good. Neutral, I can say that is a good time to invest into real estate. Identify a good sector, identify a stress property, take it. Stress property should not be legally stressed. It should be financially stressed. If it is a legally complication property, avoid it. Don't go into any property which is under construction and ready to use, not in ready to use. Property in which you have the lock and key, which you can go feel, I think that's the best property which you should take it. Insurance, a very good time to take a term plan and critical insurance, friends, because in coming after January, you will see some 10 or 12% increase in premium rates because mortality rates is high. So whatever the reinsurer, whatever the insurance companies, they all are going to increase the term plan premium for any of the age of person. So post February, you will see a little bit sharp high, 10 or 12% jump in premium. So if any of you want to take good term plan, I think January is the best month to take this term plan. Last and final note on a diversification side, don't put all your eggs into one basket. Don't put your entire 100% amount either into equity, either into debt, gold, or real estate. Every asset class has a negative thing, every asset class has a positive thing. Now, what asset class give a very good return in 10 years? What I saw in last year, बहुत सारे good equity investor who earned lots of money, they became the expert now. कि I know the market, I understand the market, I earned that much amount of money, I know how to invest and all these things, because market ne abhi tak you see only the one sharp ups hill only. The other part of hill is still pending, which anytime you can see into the market. So I will see what you saw as of now is only up. The side when this go down, I think that's the testing time. Then you can able to understand you whether my equity is good or wrong. So if I see a allocation unit from 2011 to 2020, it recently published in Mint. That's a very good lesson for all of us. If I am an expert, in 11, gold is the first, which give 29% of return. In 2012, it's mid cap. In 2013, in international, 14, small cap, credit risk, GSEC, government securities. Again, 2017, small cap. Again, 2018, gold. 2019, international. 2020, small cap. So, koi bhi, you will not find anyone who has a decency, who has a consistency at any point of time. Ki, okay, this is the asset class which can give me a return from next 5 years or 6 years. Gold, if you see in 2011 here, thereafter gold is on that spot. The same thing in real estate. If I am talking about 2011 here, second spot, 2012 fourth, 13 third, thereafter 14 15 here, and in 2019-20 if you see, it is on a last side. So no, not a single asset class which can guarantee you कि I am always give you a very handsome return. I will always perform, and I will always perform and give you above benchmark return. There is no asset class which can outperform. But if somebody is a very good expert, वो बोलेगा कि okay, whatever asset class give me a good return. Take an example in 2020, small cap ने सबसे अच्छा return दिया. I will invest into small cap only next year. फिर मैं देखूंगा 21 में अगर large cap ने दिया, then I will invest into large cap only. If we calculate that also into this calculation, you can understand from this chart. Chasing the winner, investing into the last year best asset class can give you a CAGR or return of 5.38%. Chasing the losser, is सबसे नीचे whatever will come at the end and the top of the side, bottom of the side, I will invest into this because if it is on a bottom side, next year it will go up. If I put that type of theory and if I applied this theory, then I'll get only 6.53%. The ultimate winner is who invest equal weightage asset allocation, who invest into all these asset class. It is not like that you are investing into only one asset class. It's always better to have a diversified portfolio, have a diversified equations to invest into all asset class. And don't be afraid it's if one or two asset class is giving you negative return. It's frankly speaking good for you. We will just take 5 minutes for this sectorial call. Thereafter, I am very much happy to take your questions. If I see in terms of sector, real estate, neutral. In terms of investment into real estate equity, real estate shares and stocks of real estate. Air and travel, definitely you see a very quite good jump. So we are still bullish for 21 and 22 for air travel. So whatever is in terms of tourism, in terms of airs and all these things, I think that's a good asset class, good shares which you can buy. Oil and gas, due to high price and everything, still on a negative side. Banking and insurance, whenever you see a good growth in any of the market, it will start first from banking and financials. So these are the things where people start getting loans. These are the things where, so bank and insurance are the first thing, which looks very positive and attractive for 21 and 22. Automotive, again positive, because in last a year, in 20, what I did, I just accumulate all these money. I didn't spend money on a big cars and everything due to the emergency or due to some of my mind about my job loss and all these things. But now I am very much assured, okay, my job is safe. I have lots of money. So what first I will do, I will go for a good tourism. I'll go to Maldives. I'll go to US, whatever is open as of now, and I'll take some of the good luxury cars. So automotive, we see a little bit positive side on that. Second, on the safety side also, there are lots of metro cities like Mumbai, where earlier people used to travel with some of the public transport, but due to safety and all these things, now they want to travel with their own four wheelers or something like that. That's why you saw a good jump in last 3 months also about the mid segment cars or mid segment automobile in terms of Maruti, in terms of Hyundai and all these things, which will going to be continue for at least for the next year. So we are a little bit bullish about this automotive. Pharma and healthcare, you are the best person to understand this business, but we are very, very much bullish. I think whatever rally, whatever disruption we saw in India for IT in 2012 to 16, the same disruption you all will see from 2021 to 2025. So guys, take my words, you will always remember me from 2021 to 2025. The next big market which is opening for India is pharma. Biotechnology, be it pharma or anything, you are going to see a very, very golden years, a very, very disruption market in India, which is a very, very positive signs towards pharma and healthcare. You will see till 2025-26. You will find an entire economy. You will find some of this sector, specifically pharma and all, can fetch you a return of 25 to 27% year on year basis CAGR. If I'm talking about FMCG, always positive, always good. IT is also good positive, because in coming times people looks more towards India for their BPOs and for their technology solution, in which India is doing tremendous work. Today's newspaper, if you see, TCS recorded their highest Q4 quarterly growth in his entire journey. So I think this growth came from India. This growth came from out of India also, where people looking India as a very good emerging market, cheap and good labor, which you will find only in India. Mining and metal, a little bit trouble, a little bit troubled market. For the side of consumer durables and all these things, still I am positive for that also. Consumer durables, people will go and spend this money whatever they accumulated in this time. So we are a little bit positive on that. Opportunity lies in every problem, which we saw in March when market is on a 28,000, 30,000. Everybody was very much threatened inside. Okay, what should I do? That is not a good time to invest into the market. Market will go down, go down, go down. But in this market, whoever invested their money in March 20, I think some of the above, they doubled their money till January 21, which is the beauty of equity. Equity always teach you a lesson of discipline, always teach a lesson of consistency and everything. And India can replace China supply chain to some extent in manufacturing. By 2025 or 2030, we see India a very good manufacturing hub, like we see in service hub and everything. I think that's all from my side. If you have any question and all these things, I'm not sure how I'm taking this question. I'll give it to Dr. Sir, and I
Yeah.
can open my Q&A or something on that. Over to you, sir. Thank you so much, all of you guys, to give me a very good listening, and thanks again to all of you for such for giving us I can say vaccination and taking care of our health. Thank you so much.
Thank you, Mr. Manish, for such a wonderful talk. I think you should correct your spelling. It should be MONEYSH.
Where it
That
is?
your spelling of your name should be MONEYSH. Thank you so much.
Thank
Thank
you
you
so
so
much.
much. So there are some questions from the doctors. We will take these questions one by one. The first question is from Dr. Jatin Shah for you. Is it a right time to invest into equity market or wait for certain good corrections?
I think, sir, if you expect a very good correction, there is not going to happen in India. If you want to start, if you have 100 rupees which you want to invest into equity market as of now, it is a good time to invest 25 or 30 rupees only. Don't invest 100 rupees into that. And whenever you see a 5% correction in the market, so if market is at present on a 50,000, if you see somewhere around a level of 42,000, 41,000, then again invest somewhere around 25% or 20% on the wealth. I think that's the best way to invest into equity as of now,
because equity is fairly valued. Okay, so we'll move on to the second question. The question from Dr. Nandalal Pankaj Nandalal Tadeja. Um, he's a very good friend of mine, settled in Dubai. Dr. Pankaj is asking what is emergency fund and how to calculate emergency fund. Like, what should it include? Please give some more details. So Pankaj, emergency fund is a very simple terminology. If I say like that, whatever is my grocery expenses, so my rental or my EMI. If I stay on a rent site, so my rent amount, or if I'm paying some EMI and own my own house, then my EMI amount. That is the one amount. Thereafter, what is my grocery expenses? It can be food bill, it can be medical, milk, and everything. These will totals of that. So take an example. If I am मैं rent पे रहता हूँ, I am paying a rent of 1 lakh rupees. I have a grocery expenses of 50,000, and I have a commitment of my child education of 5 lakhs rupees or 3 lakhs rupees of fees. So 3 lakhs plus 1 lakh plus 50,000, that comes to 4 lakh 50,000 rupees in total. I'll make a provision of 5 lakhs for a month, multiply by 3 months. That is 15 lakh. So I should always have 3 months my grocery and my emergency that expenses money into my bank account. So now two theories into that. If you and your spouse is working, if you are working and your spouse is also working, then I think 3 months emergency fund is enough. But if only you are working, if your spouse is not working, then I think you should make it up to 6 months. So it depends on you. I think 6 months or 3 months. 6 months when you singly entire families depend on you, then I think 6 months is the best period. And if you and your spouse is working, I think 3 months grocery expenses and whatever is your expenses on that side, that is amount of emergency fund you should have into your fixed deposits on a bank, which you can get any point of time. Okay. So the next question from Dr. Pankaj is what is your advice for ULIP plans, policies, LIC, etc. And should one go for such a traditional plans or not? So I think insurance is not a very good solution for equity market investment. Let me tell you in that way. So go to any oncologist for physical therapy and all these things. It is not advisable. So for investment in equity market, I think mutual fund and direct equity is good. ULIP is not good. Traditional insurance policies of life insurance or any of the companies, keep one thing in mind. If your period is more than 15 years or 20 years for payment, because they always want one commitment from you. It can be for 10 years, it can be for 15 years, it can be for 20 years. If you are happy to take this big commitment, then I think you should go with traditional plan. But just note down one good terminology into that. In any of the term plan, choose the term plan which is non-participating. So if I say non-participating term plan, in which your maturity amount is fixed. So if they tell you, okay, you need to give 5 rupees to me for next 20 years, after 25 years, you will get 100 rupees, that is fixed. Whatever will be the bonus rate, whatever will be the terminal bonus, whatever will be the maturity. If my maturity amount is fixed, then you should take some of these investment, but not for a big amount. And keep mind about the period in which you need to pay. So commitment is more important. So take an example, if you are taking a policy for 15 years, and if you fail to pay after 5 years, then it will not give you a very good return. I think you will get somewhere around 80% of your entire invested amount. So I think be careful for that. So if you are ready to take that big commitment, then only go and first check whether this plan is a non-participating plan or not. Sorry for any of the advisor and everything. I am not here to telling ki everybody is doing mis-selling, but the best way to check whether this plan is non-participating plan and all, don't believe on any of the agent or any of the advisor or any of the people, including me. Just go search on the website ki, okay, this is the XYZ insurance company's plan. Go to Google, just find out the good notes on that, features from the company side. They will clearly mention whether this is a participating plan or whether this is a not participating plan. So non-participating plan is good rather than taking participating plan. Okay. So there is one request from Dr. A.K. Oza. He just want to know your email ID and the contact number. So definitely Dr. A.K. Oza, we will share Mr. Manish contact details with you. Sir, if you can able to see my this last slide, I have my mail ID. Okay. Where you can just write down any of the query you have relating to, because in this general and public forum, I cannot tell, because I can see some of the questions relating to good investment about small cap, what are the good shares and all these things. I'm sorry, I cannot tell all these names in this public forum or something like that.
and before not understanding your requirement and everything. So I think I am happy to give you any that type of help. If you can just send me some of the details, what is your investment outlook and what is your investment time horizon. Okay, I want to invest for 5 years, 7 years. Then I cannot able to give you the right stock, something like that, but I can able to give you some of the good list from where you can choose some of the stocks or mutual fund and you can invest into.
Okay. So we'll move on to the next question. The next question is from Dr. Sanjay. He's asking, what are your recommendations regarding floating Government of India bonds, and which one is the better option, gold bonds or gold ETFs?
Sir, gold bond, SGB gold bond from RBI is the very best choice compared to any of the gold ETF. Because in gold ETF, you will only find the appreciation in value. But in gold bond, RBI sovereign gold bond, you will find the appreciation in value and in quantity also. So on every 100 gram, they will give you 2.5 gram every year as an interest. So you are accumulating your quantity also, and whatever valuation is there, it's totally yours. So you can gain on the both the sides. So it's always good to have a very good SGB bond. Every quarterly, RBI issue these bonds on January, then on April, and something like that. So you can invest into this bond. This is a very excellent bond for your child future, for everybody. I think that's a very good investment. We all should do it.
Okay. Okay. So next question is from Dr. Haresh Jumani. What is the best option for the senior citizen as far as the investment is concerned?
Sir, if you are a senior citizen above 60, I think the first thing which you should take, senior citizen saving schemes which government launched up to amount of 15 lakhs rupees. So you can make a very good tax planning. Take 15 lakhs till in your name, 15 lakhs in your spouse name. So that much amount you can get a good handsome return of fixed deposits. For remaining amount, you can see some of the pension plan, or either if you have a very good strong appetite, or if you have a very big fund, then I think investing into some good commercial property which can give you some good rental yield is also a good solution. If you are looking for equity, a little bit investment option which can be liquidable at any point of time, always choose good fund in which 70% amount should be into debt, 30% amount should be into equity, but don't go beyond 50. So you will find lots of mutual fund in balance fund category. Mutual fund balance fund category, you will find lots of fund in which there is equity exposure is 30-40%, 60 to 70% exposure into debt. I think that's the best way to start your investing into equity, and take a monthly dividend payout option. So every month you will get some of the dividend from that.
Okay, so we have still 2 minutes left. We can move on to the next question. The next question, that is an interesting question. What are your views on the cryptocurrencies investment?
Sir, don't invest. Strictly no, because in India it is not legalized as of now, and Indian government, whenever they come and if they disagree this, then you will lose your entire money. So I will not suggest, don't go. It's more like a lottery, nothing else.
Yeah. There is another question from Dr. Puneet Kumar. Dr. Puneet is asking, please tell us something about NFO funds and how much of share to debt and equity out of 100.
So, sir, Dr. Puniji, I think NFO is not like any other thing. So we should not invest into NFO. I'll tell you very quite reason into that, because they don't have any performance history and something like that. You will find performance history of the fund manager, but not about the fund. So usually it's, I'll not say gimmick, but it is some of the marketing text for all these AMCs who are coming with new NFO. Better than this, if suppose one NFO is coming with some of the feature or some of the tasks. So if one NFO is coming like small cap, so just identify what are the existing small cap funds which are into the market, and what good small fund performed well. I think you should invest into that fund rather than taking any of the NFO side. And how much share of debt and equity out of 100? So Puniji, if you are in the age bracket of 30 to 40, then I think 60 to 70% should be into equity, 20 to 30% into debt, 10 to 20% into gold. If you are more, if 50 and more, then 50% should be equity, 30% into debt, 10 or 20% into gold. If you are more than 60 years of age, then I think only 20% into equity, 60-70% into debt, and 10 to 20% into gold.
Okay, Dr. Puneet is also asking, what should be the age limit to buy the term insurance?
Sir, I think you should take insurance if you are till the age of 50. After 50, I don't think so. We all need insurance because we are not betting on our life. Usually people say ki, okay, I have a whole life plan, but I don't need plan. If I stay alive till 60, 65, I think I am much capable to take care of my goals, I am much capable to make enough wealth for my side. So if I am in between 25 years of age to 45 years of age, I think that is a very right age to take any of the term plan. Post 50, always avoid to take any of the term plan. You need to pay a big premium, and eventually you don't need it.
Okay. Dr. B. Anand Kumar is asking, is it advisable to exit from a small cap mutual fund right now?
So, Dr. Anand sir, if you already invested and if you are getting somewhere around 10 or 12% or 13% of return, I think that is a very good time to book some of the profit. So if your investment amount is 100 rupees, just 50 rupees, redeem to 50 rupees and put it this into either gilt fund or dynamic bond fund. It's a right time to book some of the profit from small cap, though I will not suggest to exit entirely if your time horizon is 3 or 4 years more. So if you can stay invested for next 4 to 5 years, just just redeem 50% of the portfolio, stay 50% with small cap. But if your time period is only 2 years now from here, I think then you should exit entirely.
Okay. So, Mr. Manish, there are still some questions from the doctors who are attending this today's live webinar. But in the best interest of the time, we will take the last question of the day. And the last question for you, Mr. Manish, is do you recommend a financial manager, financial advisor for the healthcare professional, or they should manage their own?
सर आप मेरे पेट पे लात मार रहे हो बट यस आई कैन टेल यू वन थिंग गाइस इट मैंने बताया ना आप योर प्रोफेशन एंड माय प्रोफेशन इज वेरी मच सिमिलर टू सो आई कैन कोरिलेट इट कि अगर इफ आई हैव अ नॉर्मल हेडेक आई विल नॉट गो टू अ डॉक्टर आई विल टेक अ मेडिसिन व्हिच आई नो but if I have a severe headache I should go to a doctor. So if you can manage your wealth very well, then I think you don't need any financial advisor or consultant to take care. But if you want to take a expert advice into that, I think in India today is a very right time to take some of the good advisor into that, and you will find with us some fees and everything. And I think for paying fees for this is reasonable, because ultimately losing your entire money, I think it's better to give it to somebody who is experts, who knows them better. But at any point of time, don't give so much liberty to financial planner or any of the advisor who can do anything for your money and you don't know what he is doing. So your watch, your review is very important. So either at your front or either at an advisor fund, it's always advisable to review your portfolio on a 3 month cycle. Call your advisor and tell, I want to review my portfolio. Wherever is my money? What are the stocks? Just tell me, come and tell me. He should tell you all these things. If he is not giving you that services, then you should manage at your own. But I think it's advisable if your amount size is big, if your equity corpus is big, to take some of the advice from financial planner.
Okay, okay. Thank you, Mr. Manish. So I request all the healthcare professionals who are watching this live webinar, if you have still any queries to ask to Mr. Manish, please write your queries to Manish on the email ID which is shown on the screen, and Mr. Manish will be happy to answer your all your queries. So thank you so much. Thank you, Mr. Manish, for such a elaborative and wonderful information on the financial management. And I think that such informative session will definitely help all the healthcare professionals to manage their money in a better manner from now onwards. So thank you so much for sparing your valuable time and guiding us. And at the same time, I thank all the healthcare professionals who have joined us for today's live webinar on the financial management, for sparing their valuable time and joining us for this live webinar. Thank you so much. And I'm also thankful to the organizing committee of this live webinar, Mr. LCS Sri Vishnu, who is the Associate Vice President for WOCAD, and Mr. Harish for superbly planning and executing this program. So thank you so much and good day.